Fundstrat's Rob Sluymer is spotting something interesting in the charts. And Rob, if it's just one thing that's interesting, well, I can't come over there and hug you, but I'll just wave.
All right. Well, let's talk about the market in general. Look, there's two things we always got to think about when we're talking about technicals. There's magnitude and price levels, and then time, which we measure with momentum indicators. So, look, the S&P has managed to slice through pretty much every technical level without any problem so far. It's down another 10% today. Took out the 200-day. It took out the 200-week today. That was a fairly important level. That's the secular uptrend that was in place from 2011, 2016, and we took it out today. So there's a lot of damage happening. Where's the next level? So this, I think they were talking about it earlier, but 2346 is the low in the fourth quarter of 18. That also happens to represent a 62% retracement, roughly, of this entire 2016 to 2020 move. So it's a fairly important level. So we haven't seen a lot of evidence or a lot of divergences that the market's able to dig in and find a level. That's really the next level that I think is important. If it can't hold there, we're probably looking at something around 2100, which is a pretty big number. The key point here is when we look at these weekly momentum indicators, they track 1 to 2 quarter shifts. They began to stall out as we moved into the end of January, beginning of February. It was a fairly good timing tool. Never expected that kind of magnitude, but it argues we're not going to see a low or a bottom until we move well into April, possibly May. So it's going to take time before we actually see a bottom take hold. Let's take a look at the Nasdaq, because that's, as Tim was just pointing out, huge leadership, basically at new relative performance highs versus the S&P, but it took out its 200-day. And the next key level here is between 6,600 and 7,000. So that takes you sort of back to these lows. And here again, this momentum indicator says there's still more time. It's too early to back up the truck to come back to these names. We need to see some bottoming. And lastly, right to the point of Microsoft, look, we took out 141. 131 is right around this level. We're starting to take, 131 is down at this level. And the next level below that takes you all the way back to 116. So momentum says there's still more time, probably into the middle of the second quarter. And in terms of relative performance, these stocks need to come in. It's probably going to put pressure on a lot of the leading areas of the market. And that's when we start to see a bottom, when we start to break these leading stocks.
All right, Rob Sluymer, looking at Microsoft, especially. Rob, thank you very much. Appreciate that. It's interesting, this comment that Dan made. I think it was Dan Niles who had made this, you buy when Disney says they're going to shut down. Is there some sort of indication that we think that if companies were to come out and say, you know what, we're taking the month off, that maybe that would actually help the markets in some ways?
I don't know. That I can't. I don't know the answer to that.
Clarity.
But I understand what you're saying.
Bending the curve down to BK's point.
And that could define like the height of the unsettling news and stuff. I think you make a fair point. It's interesting. Rob mentioned Microsoft, and I get such a kick out of Twitter because the trolls are out in force. They say we never make bold calls, but I'll tell you categorically, because I know, because I was sitting here, on February 11th, Microsoft made an all-time high of 190.40, I believe. And if you recall on that day, on rather large volume, it reversed, closed significantly lower on the day. And we sat here and said, if you were looking for the turn in the name, that was probably it. And now history, proves that we're correct. So now if you're looking for an entry level, I got to tell you something. This 140 level is where we sort of traded sideways at for quite some time. I think 9 or so months ago, Dan's looking at the chart. So there is clearly opportunity. And Microsoft is not going out of business. And what they do is still extraordinarily viable. The market's just correcting. So I think to Rob's point, you saw the turn, but I think now you're getting towards levels where if you've been waiting to buy the stock, this looks pretty interesting to me.